Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome, and make sure you like and subscribe. So as always, let's jump right into it. So this is the weekly watch list for July 13th, 2020. So the first stock that we're going to look at is SPY. It is over here we have the daily chart of SPY, and we're also going to have a 20-day 15-minute chart, so we can actually see two different perspectives, kind of longer term patterns and then also short term patterns, so we could kind of break it down a little more. So as you could see, back in March or February, we had the big drop, the bounce, okay, and then a pullback to the 200, okay, and we'll zoom in. And now what we're starting to see is another bullish pattern, potentially to retest these highs of this we'll call it 2350 levels, okay, right here. And then if we actually break above these highs, we might just slip right all the way back up to this 333 level. Sorry, probably up to about the 332.5 to 333 levels, and then maybe even retest highs. I know the stock market's going crazy right now, okay, versus what's really going on in the economy. There's millions of job losses out there. What's happening in the real economy is not being reflected as what's going on in the stock market. And you have to understand that. Don't try and make the stock market or what's happening kind of rational. Don't think it should all have to match, because it doesn't. Sometimes you'll see divergence. If you guys know me, I'm always trading divergences and stuff like that. And right now we're seeing a divergence from the stock market to the economy. So you gotta be really, really careful and understand that, and don't fight the trend. The trend is higher. I'm gonna draw a couple trend lines, right? If we just go from this low up to this low right here, we'll bring this over in the channel, and this is what the market looks like, okay? If you're trying to short, it's going to be a very expensive game. Now, could news change everything in an instant in a market like this? Of course, right? The market was up Friday yesterday just because some company, I believe it was Gilead, came out and said one of their drugs was, for what's going on, a little better than expected, and so the whole market rallies on that. But also, I think there's a lot of winners and losers in this market. But again, don't fight the trend. Don't try and I'm with you. Yes, the market should be lower, but guess what? It's not. Understand that. If you take one thing away from what I'm talking about today, please take this away. That the market doesn't care what you think. The market will do what it does. And if you read the charts will tell you when to get in or stay in, or when to short, okay? And right now the market's telling you to actually stay long, in my opinion, okay? Because look at this nice potential breakout that we're going to have up here. Kind of, you have multiple tops, right? I call this a tabletop, just like on market profile, right? You have multiple highs, touch, pull back, touch, pull back, maybe even a inverse head and shoulders, and we'll get to that in a second. And watch for a breakout. And the first target would be, major target would probably be these highs over here. Okay, if we actually go to the 15-minute chart, we could see this same pattern, and this is where I called it the inverse head and shoulders, okay, of right here. Right, so we have our left shoulder, right shoulder, left shoulder, head, right shoulder, take this, and to be able to see where this potentially could go if we do break out, this is where we're going to use our Fibonacci extension tool. Okay, draw from the low to the high, all the way back down to the low. Okay, and let's take a look and see if these levels match up. And look at this, right? We match up just a little bit higher is the 200% from here, but in between the 161 and the 200. But these would be your levels. We'll call it 320, 322, 324 and a half to 325. Okay, on the SPY, those would be the levels I'd be looking at for this week. And also, if you want, we can even say on the bigger picture, okay, we have shoulder, left shoulder, head, right shoulder, right? And then if we take this Fibonacci extension from this low to, we'll call it this high, and then all the way back down, let's see on the bigger picture where it takes us. And just like magic, our 200%, so from this entire move, if we flip it over, okay, and we actually complete this whole pattern, it takes us right back to the all-time highs. I can't make this stuff up. You see me draw it, learn your fibs. Go watch some of my previous videos of how to use Fibonacci's and things like that. So hopefully that'll help you out. So that's, I'm going to say this coming week, I'm bullish on SPY. S&P E-mini futures, I think the market's going higher, bearing any bad news. Anything could take this market down, but until then, don't fight the trend. Next stock I want to take a look at is Apple. Look at Apple. Apple is on a tear right now. Apple is amazing how during a quarantine, when most of their stocks are actually or stores are shut down, it's making all-time highs and just keeps going higher and higher and higher. Now, a couple of things I will say. This is going to be your major, we'll call it support level on any move back down right here, right? So we broke out, pulled back a little bit, but if we came all the way back down, I would be watching this level down here. Second, this, I'm actually going to draw this because what we actually have here is a potential rising wedge right here. Okay, if here's a channel, but within the channel we have a rising wedge, right? So go up, down, it's getting tighter and tighter. I'm wondering if we might go up a little more and then roll over. If we break this, as of right now, it would have to be about the 360, 365 level, but as we get higher, that number will go higher. I'd be cautious in wherever we break. Once you see what I call the fish hook, right, we roll back over, I would definitely just grab your Fibonacci retracement and just draw from high to low, but we need to wait until it breaks over. And I actually won't be surprised if we actually went either up to this 400 level, because see how I drew the fib retracement all the way up to about 400. Well, look at where the 38.2 is. It would actually match up directly here. So I'm going to call for probably 400 until we see some selling. Also, 15-minute chart looks bullish, like it wants to break out. Potential bull flag, right? Here's our flag. Here's our flag pull. Break out to the upside and keep going higher. So I'm gonna call 400 potentially. Again, none of this is ever trade advice. I'm not a financial advisor, so make sure you go speak to one. But this is for entertainment purposes only. So don't take away I say it's going to go up or down one way or the other. So next, Netflix, NFLX, right? Netflix breaking out. Nice breakout here. Okay. We can also see the same thing here. And this thing's just on fire. If we zoom out, grab I'm actually going to grab my Fibonacci extension tool and go from this low to these highs and then all the way back down, and look at this, right to the 200. So this is no longer in play. Let's remove that and let's actually take this low to this high right here and then bring it all the way back down. Okay, and these are levels I would be looking for. I hope that kind of helped you understand how to draw Fibonacci extensions if you're looking, trying to learn Fibonacci's and all that. It's all relative, but try and look for the most common thing. You can even draw one from this low to this high right here and then back down. Okay, and we just want to try and find confluence of levels. So I'd say probably the 565 level to the 583 level, 629, and then ultimate target for this move would be around 661. So those are levels I'd be looking at for Netflix. And then finally, or actually two more. Let's take a look at Roku. Roku's actually been crazy. Not rock, R-O-K-U. I'm like, that chart doesn't look right. So let's look at Roku. Roku's had a massive bounce over the last couple weeks off that 100 level. But if we draw just a trend line, we broke out to the upside on that. And even here, so look at this potential massive flag that's going on here. Breakout with conviction in my eyes. Maybe we pull back to this 147 level, maybe the 145, but keep going higher. I actually won't be surprised if we retest all-time highs on Roku in the near term if the market keeps on doing what it's doing, meaning moving higher, going up towards all-time highs. Is people are watching more and more TV. Roku's kind of dominating. But also, if we look here, nice inverse head and shoulders, right? And look at this, right? Kind of here's our slanted neckline breaking out. Grab our fib extension tool, go from this low to these highs over here, and then back down. And these would be our levels, 211, 252, and then 300 on Roku. I know they're crazy numbers, but look at Netflix, look at Tesla. Never think a stock cannot go higher, even if it doesn't make sense. So those would be the levels. Also, if we look at the short-term chart, kind of see shoulder, head, shoulder on a smaller time frame too. So everything in Roku looks good, but again, we might get a little pullback to where if you want, look at maybe doing an entry. And then let's look at crude oil, and remember, always use stops. Stops are one of the most important things you can use. So crude oil, very, very interesting. Inverse head and shoulders. A couple months ago, we thought crude oil was going bye-bye and was never going to bounce and be positive again, but potential shoulder, left shoulder, head, right shoulder, inverse head and shoulders, right? Here's our neckline. But be careful with this. There is still pending possible shutdowns of the economy, things like that. So we still got to be really, really cautious on this. Me personally, I would love to see crude oil maybe pull back to about this 27 level to be a buyer for a bounce back up. So this is something I'd be looking for with crude oil. Now, as far as if we break above this 41, we'll say 41 in the quarter area, we might get some traction and then go up to retest the 200, touch the 200. If we get it up here, it is also the 50% Fibonacci for the last 2 years. This is a 2-year daily chart from high to low. 50% with the 200 with this lower gap. So somewhere around the 40, well, we'll call it the 49 to 47, 46 levels. If we do break higher, watch those for potential shorts. But if we break above this 41, we could see a move up to those levels. So, as always, I appreciate you guys watching these videos. I hope you guys find them useful. If you have any questions, leave them down below in the comments. Again, make sure you guys like and subscribe. Until next time, we'll talk to you soon. Thank you.